Hey everybody, let me introduce myself. My name is Phan. I'm a startup specialist with Google Cloud, and my job is to help startups get onboarded into Google Cloud, do investor introductions, to get them onto cloud with credits, and basically to make them grow as big as possible. Today we've got a panel of all-star investors who are investing at the bleeding edge of technology. They're investing in AI, crypto, and they've got a lot of great experience. They've already had a very lively discussion in the back, but before we get back into it, can you guys introduce yourselves? Tell us about your fund thesis. Doug?
Sure. Hey, everyone. Doug. I'm an investor at CMT Digital. You could think of us as the crypto arm of a larger US-based trading and investment firm. We've been around for about 28 years, primarily doing electronic trading in the US. So we trade traditional derivatives, equities, options, and also crypto. So we've been doing that for about 10 years. Around 9 years ago, we decided that investing in the asset class was actually bigger than just trading crypto. And so we started to raise external funds for that. So today we're in our fourth fund, the 100 mil. We primarily invest in the early stage for crypto. I think broadly the thesis that we have is crypto is just programmable money, right? And there's three things you can do with money. One, you save it. Two, is you spend it. And three is you invest. And so I think broadly within those buckets as well, you're seeing an emerging category for coordination layers within cryptos. That could be crypto AI, using DePIN and other things. So happy to jump into it today.
Right, so I'm Daryl. I'm the general partner at TRIVE Digital. We are an early stage venture fund based out of Singapore. Originally, about 10 years ago, we started in venture capital investments in Southeast Asia tech. And about 4 years ago, that's where we started crypto investments. And it was just last year that we launched our dedicated Web3 fund itself. So we are usually extremely early. We do pre-seed and seed. And usually, I would say that where we come in as a value add is because all of our partners are ex-operators itself. So basically, essentially fundraised, operated, exited our own startup itself. And of course, in terms of our thesis, it's kind of similar to kind of Doug itself, right? Where fundamentally, when Bitcoin first came out, it was to kind of change the way the financial markets actually work, the way we transact. So broadly speaking, we invest mostly right now in decentralized finance. And of course, in terms of the horizontal wise, like AI is kind of like applicable to it. So yeah.
Hey guys, thanks for having me. I'm Nathan, currently working at Arche Fund. So Arche Fund, as you can imagine, is the investment arm of 98 ecosystem. So we focus primarily on two things. So first thing is that we focus a lot on human capital, which means that we empower both founders who can actually bootstrap the ideas to go to the global stage. And especially we will try to help them with every toolkit from being the backing of the builders from 98 itself. And secondly, as the investment arm of 98 ecosystem, we focus a lot on leveraging what we have right now in-house in 98 ecosystem to actually help them during the way and give them proper advice and guidance during the process. So that's a little bit about me.
Hi, I'm Binh. I'm the co-founder of AVV. We are investing out of our second fund, a $64 million generalist seed stage fund. So we invest at any stage before the pre-A. We're generalists because we invest across all sectors. We're very technology focused. Majority of our investments are Web 2, but we have about 5% of our portfolio is Web 3. We started with our first fund, 500 Stars Vietnam, started investing here in 2015. We have since renamed 500 Stars Vietnam to AVV. So that means we've invested at the seed stages of companies like Elsa, Trusting Social, Coolmate. We are in the seed investors and only investors in Southeast Asia, in Sky Mavis. And then we have other US investments in AI, such as Turing, that we've invested at seed. We hyper-focus around technology because the team's background has been mostly that. So 20 years in technology and then 10 years in VC. Thanks for having me.
Okay, so I imagine there are a lot of people here in the room that want to raise money from you guys. And so I want to get some more insights in what's your investment thesis and how do you get your money? Let's start off with Doug. You represent CMT. CMT has its core business, and you guys are the venture arm. How does that work, and how do you end up eventually getting money from CMT?
Yeah, so you could think of CMT's venture arm as just a classic, fund where we raise external capital and then we invest in the early stage for different companies. So there are obviously a lot of synergies with the core trading desk that we operate. So looking at certain categories such as anything to do with trading, exchanges, DeFi. I think that's sort of been the core thesis for us for a long time. So we were early investors in Falcon X and Coinbase. We also probably think there's a lot with the sort of payments thesis. So if you look at Circle and some of these other early investments that we've done, that's sort of overall where we felt that the market was mature enough at that time. And I think over time, as the complexions of the funds start to change and the market starts to mature, we started to look more at consumers. So within Vietnam as well, we invested in both Cypher and Sky Mavis. And I think broadly over time, it's just understanding where the market is and investing within that at the right time where the right infrastructure is in place. So I think broadly, back to your question, what do we look for within a founder? If I could sort of reframe that, I think no founders are the same. I think broadly we have a few maybe yellow or red flags that we sort of avoid, and I think one big one is just domain expertise. So if you look within say the crypto AI space, a lot of these founders actually don't have any experience within AI. I think that's probably one sort of red flag that we sort of look out for. But there's no really hard and fast rule, I think, for what it takes. That's your question.
Okay, so thank you, Doug. Doug brought up kind of blockchain and AI and the intersection of. Before this panel, I noticed that Daryl had actually written an essay about this in Medium nearly 2 years ago.
It's been a while, yeah.
Daryl, do you want to give us an overview of what your thoughts were then, and if you have any updated thoughts on large language models and blockchain?
I think back then when it first came out, it was looking at potential use cases because in terms of GPT-wise, the application has been trying to it was more applicable towards summarizing information, right? Because that was what the models were able to kind of do somewhat effectively itself. I think my thinking back then was trying to find out, beyond that, is there anything that we can look into, for example, in the realm of, say, blockchain-wise, looking into, say, navigating, say, threat detection, right? Or improving code development or accelerating code development. Or even say, like right now, at least from what I've been seeing and investing as well, is we're seeing intersection between AI, blockchain, and DeFi, right? So for example, we have a company, they do automated smart routing. So what they do is that they basically, it's kind of like programmable money, right? So instead of using or relying on like Swift or TT, you basically just put a, whatever denominated currency you want, fiat-wise, and the settlement layer is actually blockchain, but then the receiving party is receiving the fiat-denominated currency as well. So you kind of take away all that complexity, but at the same time, it's all integrated with existing traditional financial systems itself, right? So that's kind of like one application. Or for example, another one we're seeing in terms of smart routing-wise for applying algorithms is that they can actually generate yields from liquidity pools. So instead of having you, being a DeFi expert or a yield expert, trying to navigate through the different, LPs itself, what you can do is that go through them, right? Just put in your stables, and they will actually automatically route the best liquidity pool for you, right? And automatically rebalance that too. So from a retail perspective, it takes all the fuss away, with the implementation of AI. So I think this is what I've seen as an advancement itself beyond all the other use cases that I've just mentioned.
Okay, let me ask Binh this question. Binh, you've been investing in Vietnam for, I think, a decade now. You've actually been successful. You've made money here. Where do you think this is going? What does the future look like?
The future for Vietnam. It's hard to tell, but if the past can predict the future, what I've observed is that Vietnam kind of evolved from an outsourcing hub into something a little bit more globally competitive with each wave of technology shifts. So I think Vietnam was a laggard. So the whole economy is 30 years old, very young country, right? So I think all the paradigm technology shifts of the internet, social, mobile, Vietnam was always a laggard. Come crypto, blockchain, it was the first technology that a very heavy engineering digital ecosystem here could feel that they could be competitive out of the gate. And so a lot of people embrace that. People also embrace mobile gaming, right? The hyper casual mobile gaming scene. And the meld of this two was GameFi. They gave birth to Sky Mavis. And so Vietnam has become globally competitive in both crypto, digital assets, as well as mobile gaming, hyper casual mobile gaming. But there's an evolution to that. Right now with AI as the next paradigm shift, we're seeing a lot of the folks here actually building AI infrastructure, applying AI to all the different models. So when I look at this, everything is AI now. Everything. Every sector is going to be impacted, every organization, every leader. And so there's incredible opportunities for people to build in this in a way that is very much serving local needs and local interests. I think AI is becoming so much like energy, nuclear power, so becoming so important. And big tech and some nations have becoming so protectionist that it's really important to be able to develop solutions that are very accessible and that are equitable to be able to harness and not have, not give up sovereignty to somebody else who can control your destiny. So I do think that Vietnam as a nation has been sovereign, has been independent, and it can be a beacon for that in both AI as well as crypto.
I think that's a great segue to Nathan here. Nathan, we were talking earlier about how you're incubating teams through Arche Fund. Is Binh right here that everything needs to have an AI flavor? Like when you're building teams, are you always thinking, we're doing crypto, but we need to add AI somehow?
Okay, so great question actually. So at Arche Fund, initially we do a lot of like first-hand, very early stage incubations. Like we focus a lot on the stories of ourselves as well, because like we don't want the next generation of founders to actually make the mistakes or face the obstacle that we used to have before. So basically the core idea, core concept over here is basically builders backing builders. So been through a lot of things, and actually we can actually bootstrap for a lot of our incubations with support from like ranging from like, let's say, growing community, let's say to do fundraising, early stage fundraising, also to having some kind of like support with listing and stuff, token operation and such. So for the question about AI, so let's say as an incubation hub, we generally focus on innovation that is carrying with Web3 in general, not specifically AI, but we also focus on a lot of different narratives as well. And since the dynamic of the market is changing a lot, we have to move on and we have to go forward with the shifted and also like what people are care about. Because at the end of the day, users are the most important, and we want our portfolio companies, we want our incubators to actually build projects that solve these real life issues that the users might face. So to sum up, I think that like for the incubation side, we actually receive a lot of love and support during our ways from global institutions back in 2017 till now. So our job right here is to actually take these Vietnamese or Asia in general talents back to a global stage. So that's what all the incubation is all about.
Okay, so I'm thinking, I'm looking at Daryl right now, but I can open this up to everyone as well. When I see these panels and they talk about blockchain and AI, I notice all of you are at the cutting edge of technology, and Binh seems to be very anti-labels. Are the labels meaningful? I mean, is it important to make a division? This is AI, this is Web3. I'm thinking of Sam Altman here too. He was an early adopter for Orb and is probably the most visible AI leader right now. Or is this just all math and code? Daryl?
I think I have to agree with that in terms of like you don't have to label things because eventually everything is AI, right? Even like don't even talk about like the projects we invested in. Talk about our own businesses. I'm sure all of us have applied AI within our own businesses as well, right? Like writing, fund management. For us, actually, our initial kind of like evaluation is done by an AI that we've actually built ourselves, right? So I think it will come to a point where every part of your business, in the supply chain itself, and upstream, downstream, there will all be AI somehow, right? So that's why I call it a horizontal application. It's not necessarily labeling them, unless of course you are investing in say AI infrastructure. Right, I think outside we're talking about like semicon, right, in hardware, or you're talking about building the models itself, and perhaps yes, you may want to categorize them. But if you're talking about just general businesses, regardless of whatever industry or subsectors they're from, I don't think it really matters itself. Yeah.
Binh?
What is Web3? Web3's ethos is about permissionless ownership, uncensorable, unstoppable. And so that intersection with what AI is proving to be an absolute necessity for humans to thrive and connect and do things together, there should be some meaningful intersection there, especially as the world gets more and more protectionist. You have big tech companies. I'm sorry, like if you're working at AWS or Google Cloud, if you're doing something bad, they can shut you down, right? And that should be the case. But what if you're saying something that they don't like, right? The ability to be censored and to be shut down and cut off from these very critical needs, I think that's where Web3 can help solve some of these. Right now, the need's not so great, but we're heading towards a world where things are much more protectionist, and people need to be able to align their worldviews to what they're prioritize their local needs and local interests, whereas some of these other providers might not prioritize yours.
Doug, you were telling me about a great company that you were invested in called, I think it's called 42 Network. Can you tell us about this company?
Sure, I was actually just about to piggyback off of something that Binh said. I think crypto and AI are two of the most fundamental shifts in how our society will evolve. One is intelligence and one is money. And there's certainly going to be an overlap, but they're two very distinct, types of technologies. And I think one way we bucketed it in, and I'll sort of segue this into your point, Don. One is AI enabling things within crypto, and the other is crypto enabling things within AI. So the first bucket is probably a lot easier to see. So you might have a lot of use cases where crypto teams today already use a combination of, AI code co-pilots, or using AI for smart contract auditing or screening before deploying, their capital in there. And I think the emerging technologies intersection is this other bucket where you have a certain use cases within AI that as you try to scale this in a decentralized way, it becomes pretty much impossible to do so without a blockchain substrate. So one view that we have at CMT is AI inference, which is basically when you call the model is basically going to become the dominant form of web traffic. And if you can look at a lot of these large providers like OpenAI and Anthropic, you oftentimes will end up with all the perils of centralization, such as them being able to get your data, it being very costly once they stop subsidizing some of the costs. So one company that we backed recently was a company called 42. Essentially, what they do is very specialized, lightweight LLMs that are fine-tuned for a certain use case. Let's say, smart contract coding within Solidity or Rust. You might, be able to run these very light basically very easy to run on let's a small computer such as the Mac Mini, and that means you basically are able to scale this up, and then run it without having to rely on very expensive input costs. So, and this is all only possible because you have a token that is able to coordinate a very complicated and complex network.
Okay, so one of the ideas I heard earlier today, I think this is coming from Binh, is that Web3 takes decentralization as like a major value, but sometimes forgets consumer applications. So it's totally focused on that, focused on decentralization over actual useful applications. Nathan, you're shaking your head right now. Is this something that you think about when you're building and incubating your own teams?
Yeah, so basically this is more of a personal view. I think that like decentralization sometimes is a very, let me say like a buzzword in crypto in general. A lot of teams, a lot of communities, a lot of people love to hear the word decentralization, but mathematically it is something that like, even though if you look into different political systems throughout history, that like sometimes being way too decentralized is not like something ultimate. Maybe you should consider kind of like a fine line between being centralized and being able to decentralize. So essentially over here is that sometimes I think that like founders and decision makers have to be a little bit centralized in terms of their decision making, in terms of making sure that like their decision is done in a timing manner. And also decentralization sometimes is great because like as you see in crypto, we have like a lot of DAOs, decentralized autonomous organizations that are just like leading the way to grow the community, and every decision is go through all of them. If we can somehow create a system where these two combined, I think that like it is inevitable, and the project itself is unstoppable.
Okay, so I want to ask all of you this question about regulation, but I'll start off with Binh. Since the beginning of the year, there was this perception that the US was going to be more friendly towards crypto companies. And I actually had the idea that one reason we saw so much growth in Asia in the last few years was that the US might have been overregulated. Can you share your opinions on regulation and its impact on your investing?
Okay, so yeah, I think if the US says, hey, we're crypto friendly, it's going to attract a lot of investors, a lot of builders, just because the market's so massive. And if it's clearly defined, then great. But then, there's a new president every 4 years. Who knows what's going to happen? That said, when I think about regulations, I think what's really exciting here in Vietnam, the National Assembly announced kind of the international finance centers of Da Nang and Ho Chi Minh, and they just beginning this month laid out some concrete plans and with dates set that include digital assets. That includes fintech and green finance and a few other things, but the idea that this is a high priority for Vietnam's government. They want to set up tax incentives for investors, clarity, an entire legal framework to put in place so that things are operational in 2026. In 2026, we might see a local bank running a digital asset exchange, right? So this idea that Vietnam wants to build something that's a unique value proposition and potentially a unique value proposition in digital assets globally, and putting some real resources, land, money behind it, that's really exciting. So I'm not going to predict the future, but this momentum that the Vietnamese government has had with regulations is really promising for this industry. And I guess from a investment standpoint, yeah, we're typically we're VCs, so the VC regulations here aren't clearly defined, and so we have workarounds around that. But I look forward to being able to invest much more locally as these things get defined.
Nathan, how are you thinking about regulation?
I would say that so recently the U.S. just dropped the Genesis Act and the Clarity Act. I think that it is somehow creating a pathway for all other countries. Let's say U.S. is the leader in the political manner over here. I think it is extremely good for the industry itself because we have been living too long in an industry where a lot of frauds happening, a lot of scams. You see that when they talk about Web3 and crypto in general, the mind share and also the idea that they are thinking right now is generally shifted based on these regulations. And I think that creates a pathway for, as I said, I agree with Mr. Binh over here, is that we can be ultimately operational in the next few years where there will no longer be, misconceptions about what is being able to do and what's not being able to do. Also on the investment side, I think that when the U.S. is not the leader of here. We started to see EU and Japan already drop as a legal standpoint before. But having the U.S. as the leader and create a pathway, I think it's amazing, and I can look forward to to see our portfolio companies and our projects that are coming out further from these laws.
Daryl, you had some thoughts on the Singapore regulatory regime?
So I think in Singapore, they've taken an approach where it's a little more experimental. Let's try things out until they don't. I think that's why you've seen the recent change in MAS policy in I think June of this year, where essentially they just there was this sandbox program that everyone kind of went through for the past 2 to 3 years, and they just scaled that back 100%. So it wasn't even operating without a license. It was no operations. You can't even operate out of the country, even though you're not serving the Singapore jurisdiction itself, right? So that was kind of what they scaled back on. But I think, it's probably what they're realizing that at the end of the day, that's not something they want to do, right? So I think in our opinion itself is that, at least from an investment standpoint, is if you're in any jurisdiction, right? The way I see it is that as long as you are, compliant yourself, you self-regulate, that's kind of the way to go. Because a lot of the regulators out there, they're also learning, right? So they're probably, walking the same pace as you and trying to figure out what's the best policy moving forward. So I think from an investment standpoint, even though regulations do help us in terms of doubling down, it doesn't really change our thesis because at the end of the day, when we make an investment, we look at, are you guys already self-regulating? For example, that's a Malaysian stablecoin issuer they're looking at, even though the Malaysian Securities Commission doesn't have, a digital asset policy for stablecoins, they've already kind of regulated themselves in terms of holding, publishing monthly attestation, auditing their books, and of course, ensuring that there's KYC, KYT involved within the transactions that they have. So that's something that is what kind of we advise projects to do as well. Is even though regulators, there's no regulation or policy that's in place, what you should do at least for your, I would say, sanctity, right, and the category of the business is to just start, applying those regulations on, within your processes already.
Doug, your fund is doing deals all over in the U.S., Singapore, Vietnam. Give us a global view of how regulation impacts your investment decision making.
Yeah, maybe I'll give the perspective, as how we think as a US-based investor. So broadly, we can do both equity and also tokens. And I think if you let's visit the first bucket first, which is equity. Obviously in the U.S., with as Nathan mentioned, there's some of these new developments around regulations that are forming. A big one also that I think we're pretty excited about is this market clarity bill, which would come likely later this year, and that will basically give some insight into how these tokens should be treated. So are you allowed to do things such as fee sharing to token holders and other things which basically have been otherwise a really murky area. So I think if we have to break down across all the different regions, the U.S. still has the best exit pathways for anything in the equity bucket, right? So you've got a lot of M&A happening. You've got Stripe, for example, acquiring a lot of U.S.-based companies. Circle's IPO recently has also shown that there's a huge appetite for a lot of these investors to actually pile into the U.S. stock market. And I think maybe the next couple of months you'll see this digital asset treasury trend also start to really blow up with a lot of institutional capital coming in. Following up on some of those market clarity issues, that sort of re-rates maybe the token bucket. And let's say if you're a builder based in Vietnam and you're launching a token, that actually makes it much easier for a U.S. investor once they get some clarity around how some of these tokens can be treated, and that I think gives a lot of interesting ways in which you can structure your company in a way that's more on-chain. So there's actually a portfolio company of ours called Superstate, and essentially what they're doing is allowing you to launch your equity natively on-chain while keeping a sort of window open for eventually IPOing in the U.S. or elsewhere. And I think you'll start to see experiments around this once the regulations opens up. So we're pretty excited about that.
Okay, last question. We're in an event full of builders, and I'm sure many of them will come up to you guys to ask you about raising money. So let's try to make it easier for everyone. What are some red flags that they should be aware of when they're pitching you? Daryl, what's a red flag?
Don't lie. Like, you have no idea how many people lie, and the numbers itself. We'll know if you say that or you claim that certain VCs that invested in you, or that you receive like TVL from certain liquidity providers. Just so you know, we pretty much know everyone in the block, or someone who knows someone, right? So I think just don't lie, because people find out.
Okay, don't lie to Daryl. He will find out, and he will blacklist you. Binh?
I guess I won't talk about red flags, but I think it's, just like all of you are building something that's very, very different. Investors are looking for something very different from each other. For me, I invest in equity. I want a token warrant if you're going to print money, but I look for equity. I want to be very early. I'm looking for builders who are building on Web3 that maybe it's not obvious the problem they're trying to solve, or maybe it is, but it's a massive market and no one's really figured it out, or it's a future massive problem. And so I like non-obvious problems, and the people are trying to solve it. And what they're trying to solve, people want to pay for without that token incentive. The incentive comes later to accelerate the need or awareness of that solution. And so one of the big opportunities I like to say is that, here in Vietnam, being able to build something that is permissionless, that is high ownership, that is distributed, decentralized, but serving consumers and small businesses in developing markets. I think there's a big distinction between the needs of customers in developing markets and developed markets. So I think here, this is where the builders might have an edge for developing markets.
Okay, I'll let Nathan have the last word here. What should founders not do?
So I think I pretty much agree and follow on Daryl's point. So basically, as we are actually building into the space for quite a bit of time, we started to develop a sense that is very underestimated, that that the ability to detect something is not right, something is fishy. We can always do that, and we know that pretty well. So I think that like being true to yourself, true to what you're building, I think that is much more important. Even though your tractions initially is not good, everything can be built up over time. And actually, those things are the key features that we look into every founders. If they have the ability to stay true and stay authentic, which is very rare if you see that like in the Web3 space right now. I think that should be a really huge advantage for you moving forward.
Okay, I think that's it. We're out of time, but thanks to all four of you for spending time with us and sharing your learnings.